Good morning, students. Good morning to all. And last day we have studied about the advantages of a company. So today just we will remind about the advantages of company and we will go to the next concept. Okay. So advantages of a company. So last day also we have studied the advantages of a company and I give the same portions to as your study portions now. So what are the advantages of a company mean? First one is large capital. A company can secure a large capital compared to a sole trader or partnership organizations. So when we are comparing to the sole trading or the partnership organizations, the joint stock company have the possible to gathering the large amount of capitals. So when we have the large amount of capital to establish any of the organizations, it will be very helpful to extend the organizations. Okay, and there is no chance, there is no way to gathering the more capital in the partnership organizations and the sole trading organization. But in this joint stock company, by issuing the shares, so we can easily collecting the large amount of capitals, and because of that we can easily establish the large scale industries also. Next, limited liability. So the liability of a shareholder is very limited. In the case of company limited, by guarantee, his liability is restricted to the amount that he has guaranteed to the contribute in the event of winding up of the company. When the company is going to winding up, so all the partners has the limited liability only. So on the basis of the shares and the guarantee or the amount of shares and the guarantee only, so the members of the or the shareholders of the company will have the liabilities. Okay, so many or all the shareholders and the members are no need to taking the more effort to give back the money to the any of the problem. Next, transferability of the shares. So already we know, so the transferability of the share is very easy way. So normally the poor peoples also can have the rights and the chance and the possibilities to purchasing the shares, and if the peoples doesn't have the ability to continually keep on the shares in her hand, so they can easily transferring from one person to another one of the persons. So normally whenever the company is going to issue their shares, so all the people will get the interest to purchasing the shares, but in the same time, so all the persons doesn't have the capacity to keep continuing to having the shares in her hand. But by the chance of transferring the shares from one hand to another one of the hands, so every persons can easily transfer. Next, perpetual succession. So perpetual succession means the continuity of the existence of company. So the company existence will be continued throughout the year and in course of time. But normally joint stock is normally in the partnership organization or the sole trading organizations. If any of the persons or if owner of the company is died or if any of the problem is coming, so that automatically the partnership organizations will come to an end. But in this joint stock company, so many of the members can come and go, but the existence of companies always will be static. So this ensures continuity in corporate operations and the company can undertake long-term investment. So if you want to purchasing the shares without having any of the fearness, we can borrow and we can easily undertaking all the business operations in the future also. Next, promotion of saving and investment habit. So the joint stock company is always providing some of the opportunity or creating the mentality to saving the money among the peoples, because normally poor peoples also can have the rights and the power to purchasing any of the shares issued by the joint stock companies. Even one share also can buy from the giant stock companies. Okay, so because of that, if any of the poor peoples also want to purchase any of the shares, it is very useful and very easy way. So on the other hand, the peoples also want to get the interest to make the investment on the shares. And next, risk bearing capacity. So because of limited liability only is there in the giant stock companies. So all the members, all the shareholders also can get the risk bearing capacity. The loss of company is distributed over a large number of shareholders. So each shareholders bears a very little amount of loss only. Even if any of the problems means one of the most important problem in giant stock company is winding up. When they are going to winding up, if the property is have to be insufficient, that is the main important problems. Okay, nowadays the problem like this, such as a problem will not occur in our nations. Okay, but even though if any of the problem is arised when the company is going to winding up, so all the shareholders can have the risk bearing capacity. Next, economies of large scale operations. So when they have the power to gathering the large amount of capitals, so that organizations must be taking the large scale operations. Next, the economic development. So because of having the large amount and conducting the large scale operations, the giant stock companies providing many facilities to the societies. The giant stock companies have large financial resources. They are able to undertake large scale productions. So when they are going to take the large scale productions, so the supply always will be increased. And because of that, the satisfy of the needs of more number of consumers will be occurs. Next, create large scale employment opportunities. So all the unemployment persons will going to get the employment when we are conducting the large scale operations. So beyond the giant stock companies only it will be happens. And to promote balanced regional development, because the giant stock companies will be increasing the supply of commodities, and because of that the number of market also will be increased. So there is no way to making the regional disparities. Okay, the balanced regional development will be contribute and substantially to the government by ways of taxes. Okay, one of your giant stock companies will be in the need of paying the tax in many ways, income tax and the production tax and the cost of the cost tax, and the many type of the tax also have to paid by the giant stock companies. Okay, yesterday also we have studied the 8 advantages of the giant stock companies. Okay students, today we will study about the disadvantages of a companies. But even if there is more advantages in a giant stock company, some of the disadvantages also will be there. So what are the disadvantages are there in this giant stock company mean? First one is costly and difficult to form. To establish the giant stock companies, it is not a easy method. It will be creating a costly and very difficult to establish. So the number of legal formalities must be absorbed in the formation of the companies. So in this sole trading organization and the partnership organization, there is no more legal formalities. Okay, so by collecting or by joining the 20 members, we can easily establish one of the partnership organizations. And in the sole trading organization also, if we decided to establish the shop, it will be easy. But in the giant stock companies, not like so. To establish the giant stock companies, there are more legal formalities. So the more legal formalities also must be observed in the formation of the company. To observe these legal formalities, promoters have to spend much time and money. So all the promoters have to spend more money and the time also. Simply, if you are considering the building of the giant stock companies, So we must spend more time, and it will be take more time also. Next is scope for dishonest and unscrupulous management. The directors manage the company with the help of the paid officers. Paid officers means some of the managers and some of the workers will be working under the board of directors. So here the board of directors only may be an active and will be very honest to the joint stock company. But we can't expect the honest among these payable persons. So the directors are dishonest, they may make personal gain at the expense of the company. So even if the directors or the board of directors are not honest, he will get the personal gain at the expense of the company. By the way of expense of the company, so the board of directors will get the personal income. So they may misuse their power and positions. Just to see if any one of the joint stock company, the chairman or the most powerful persons or most authoritative persons will not be existence in the company. But this all the responsibilities will be transferred to another one of the persons. And if he has honest, dishonest means, these persons only will get the gain, the personal gain by the way of company itself. Next, management oligarchy. A few rich persons may secure control over the affairs of the company. So thus the management of a joint stock company might become oligarchic in characters. So oligarchic means the small group of people having the controls. Just if you see the joint stock company, we can see many problems. Some of the board of directors or the managing groups or some particular peoples of the family, the authority members family only will dominating the joint stock company truly. But even though if there is more honest persons and more skillful persons are there, because of their fraudulent activities, it will be affect the joint stock company truly. Next is speculations. A few individuals may corner the shares to gain control over the company. So normally on the basis of the value of company, the value of shares also will be increased. But in the same time, some of the peoples will have the control to issuing and purchasing the shares. Because we must know one thing, if any of the directors or if any of the persons want to become as a manager or a board of directors, so he must has the 51% of the shares. So whenever they are going to issue the shares, they will not issue the more number of shares. And even if they are going to sell all the shares, they will consider or they will taking the effort to keeping the more shares on his own hand itself. So by the way of the speculative motive, a few individuals may corner the shares to gain control over the company. Next, lack of interest. So the officers of the company do not have incentive to work hard. They are not usually inclined to take risk. They lack initiative. So if any of the persons working in a joint stock company, they all will not taking the more effort. They won't take any hard work. Even if they are taking any hard work, sometime they will not get any of the incentives. So the initiatives always will be in shortage or very lack. So if the initiatives, on the basis of the initiatives only, one joint stock company must be grown up. Next, lack of good labor relations. In sole trading business, personal supervision is possible, but in company form of organization, there is lack of personal contact between owners and workers, because some of the steps of or the basis of the managers and the board of directors also is there. So when they are doing like so, the workers cannot able to make the personal relationship with the owner or the organizers. So the contact between owners and workers, as well as the workers and the consumers also, will not be as possible. As a result, there is a scope for more industrial disputes in a company form of organizations. If any of the industrial disputes arise among the workers, the joint stock companies will face the failure. Right? So even though if there is more advantages, some of the disadvantages also there. First one is costly and difficult to form. Okay, to establish the joint stock company is difficult. Next is scope for dishonest and unscrupulous management. The joint stock companies always creating the dishonest and unscrupulous management, because of more money and more profit is going and coming from a personal way out of the joint stock company. Next, management oligarchy. Okay, there are some few group of peoples will have the power to control over the management. Next, speculations. Speculations means, so the companies always will may have the corner the shares to gain the control over the company. Next, lack of interest. The workers and the board of directors also will not get any interest to maintaining and improve the joint stock company. Next, high taxation also is there. Joint stock companies have to pay tax all higher rates compared to other forms of organizations. So because of the joint stock company, the government may have the profit through the tax, but the taxation will be affect the joint stock companies, because the overburden to tax is one of the disadvantages of the joint stock company. Okay students, next you will study the types of companies. So types of companies mean in the joint stock company itself, so different types of the companies are there. So the classifications of companies, so the companies are classified on the basis of incorporations and on the basis of membership. So on the basis of members' liabilities, on the basis of control, and on the basis of nationality, we can classify the companies as a different types. So first we will study the classification of a companies on the basis of incorporations, the method of corporate or the method of formations. So we can classify the companies. So first one of the company is chartered company. The chartered companies are established by the king or queen of a country. So before the freedom of India, some of the kings and the queens might have been ruled our nations, and till some of the nations is governed by the kings and queen only. Suppose in a situation if the kings and queens are providing the power to start at any of the company, that is called chartered companies. The powers and privileges of chartered company are specified in the charter. Charter means, for simply just to think, it's one of the document. In Tamil we will say the Patayam, but in one of the charter. Okay, so every power and the privileges of chartered companies are specified in the charter. So power to cancel the charter is vested with king and queen. Suppose if joint stock company want to bring the cancelled, the power of king and queen only can able. For example, East Indian Company, Banks of England, Hudson Bay Company. So the Companies Act does not apply the term. Such companies cannot be started in India also. Okay, if any of the all the company's rules are specified in a charter and the king or the queen is provided the rights to conducting the companies, that is called chartered company. Next, statutory companies. Some of the companies are established by a special act made in parliament or state assembly. For example, Food Corporation of India, Life Insurance of Policy, and GIC, Reserve Bank of India, SBI, IDBI, Railways, Electricity. So these companies also called as statutory companies. So if a nations are being in need of establishing any of the companies for the purpose of providing the special facilities or special services to the public, so one of the act will be made in a parliament or the state assembly. So constitution of company is specified in the memorandum of associations. So all the rules relating to day-to-day management of statutory companies are specified in the articles of associations. We will study later about the memorandum of associations and the articles of associations. So audit of statutory company is conducted by the Controller and Auditor General of India. So this type of the statutory company will be created by the act. It's a special act. The special act is enacted in the parliament or a state legislative assemblies. If any of the company is having the need of established in the state assembly will be enacted, and it in the central, so the parliament have to be enacted. Next, associations not for profit. So according to section 25, the central government may by license grant that an association may be registered as a company with a limited liability without using the words limited or private limited as part of its name. The license will be granted only in the case of association not profit. In other words, the central government will grant the license only if it's satisfied that the association about to be formed as a limited company aims at the promotion of sports, commerce, arts and science, religion, charity, or any other useful objects. Normally, some type of the associations will be used for the purpose of providing or rendering the services to the public or some particular peoples or some of the particular societies. Now, if the individual people or the government also can have the rights to start at the associations not for profit. So the religion or the charity or any of the trust also will be considered as the associations not for profit. So it intends to apply its profit, if any, for promoting its objects. So before started the associations, they have to specify their objectives in the memorandum of associations. So what are the objectives mentioned in this memorandum of associations? That objectives must be fulfilled. And in these associations should not focus on earning profit. But even though if any of the profit is earned by the associations, this earned profit must be spent on the objectives of the promoting of the objects only. Next, it prohibits the payment of dividend to its members. Any of the problems is arised or any of the income is earned by these associations, this association should not provide the dividend to their members. Such companies may be public or private companies and may or may not have share capital. Sometimes some of the associations can issue the shares, but even though the amount earned by the issuing shares must be spending to the promoting its objects only. Okay, students, it's enough. So if you have any doubt, please ask me. Today we have studied the classification of companies on the basis of incorporations and the disadvantages of a companies also. Just to take the disadvantages of a company as your study portions. So here if you have any doubt, please ask me. Thank you.